Hi everyone, a very good morning. This is your host Vaibhav. In today's session of Daily Stock, we are going to consider the financial earnings, the fourth quarter earnings report of the JP Morgan and Chase, which is the largest bank by market capitalization in the world. Its earnings were released just a couple of hours back, and we are going to see how we can look at these earnings and see if there are emerging opportunities to trade and invest in its stock price. First, we will see the highlights of its earnings report, and afterwards, we are going to also consider the technical charting to assess its price performance over last couple of weeks, couple of quarters, and of course from longer term perspective as well. The record profit was achieved for the last fiscal year. The profit was just little shy of $50 billion, and if we look at the precise number, the net income stood at $49.6 billion, which is the highest ever profit earned by the JP Morgan Chase in a single year. And if we look at the quarterly earnings was also quite good, but there is deep in the quarter's earnings because there was one time FDIC assessment charge of $2.9 billion, and that pulled the last quarter's earnings lower. But if we exclude that, the earnings was also showing growth in year-on-year terms for the last quarter. But if we compare it to the prior quarters of the fiscal year 2023, then there was decline. This is the supplement from the earnings press release, and in it the bank has listed its achievements, its financial earnings, and the relevant ratios. You can access this from the investor relation page. We will look at the key highlights of the earnings. The net profit stood at $9.3 billion, and EPS, the earning per share of $3.04. The revenue were just little below $40 billion, and if we look at the total revenues with inclusion of the forex reserve impact, these were at $39.9, and if we exclude that, then it comes to 38.1. And this is in comparison to the third quarter of fiscal year 2023 and fourth quarter for the fiscal year 2022 for the quarter and quarter and year on year comparison respectively. So the net income was lower than the prior quarter, and also in comparison to the prior year. No, it was higher than the prior year. This is the EPS, the financial results. We will look at the consolidated statement to get a better idea rather than going through these highlights. Let us go to the consolidated statement of income. Now in it you have all these revenues and the breakup from where these money, where this revenue came in and how it was spent. So we have key segments, four key segments for the JP Morgan and Chase, which are all showing growth in the last quarter of fiscal year 2023, with these total revenues of $38.5 billion. And if we compare it to the prior performance, the revenues were 3 percentage point lower in a Q quarter on quarter comparison and 12% higher in year on year comparison. So we have this comparison in place as well. The net income was 29% lower quarter on quarter and 15% lower year on year because of the FDIC charge of US dollar 2.9 billion. Now coming to the balance sheet is quite strong with its philosophy of fortress balance sheet. We will also look at the segment results. Alright, here it comes. The consumer banking is the biggest revenue generator, consumer and community banking, which pulled in US dollar 18.1 billion. Afterwards comes in corporate and investment banking, then commercial banking and asset and wealth management. All these four segments have recorded growth in annualized terms, year-on-year terms, but not so in quarter-on-quarter terms because for the fiscal year 2023, the first half was also quite good and even the third quarter. But as I said earlier, also the fourth quarter is lower in comparison to the prior quarter, and as a result of that, there is not much of a growth, and actually there is decline in quarter-on-quarter terms. Here you can see that the biggest contribution to the net income came in from consumer and community banking. So these are the key highlights of the financial earnings, and the takeaway is simple that the bank was able to ride the wave of recovery from the economic downturn which we saw in the financial year 2022. But there are challenges, there are headwinds which are likely to continue in the coming quarters as well. And even after these stellar results of the highest ever profit, the caution is warranted because it is not likely to be sustained in the same manner, in the same way the aggressive growth has been seen in the prior quarter, and some moderation on that account is expected. There are a lot of conflicts raging around the world. The inflation is still running high. Of course, there has been moderation in the inflation in last couple of quarters because of the policy tightening by central banks in the developed world. The Federal Reserve and ECB has been tightening their monetary policy, and in the in the ongoing fiscal year 2024, we are likely to see the rate cuts. Even JP Morgan Chase is expecting six rate cuts to take place in this fiscal year as the economy is cooling off, and in near future we will require that some support is provided by the central banks. So the challenges remain. There are many factors to consider. So even after these record profit and the quite an bull run which we have seen in the share price of the JP Morgan Chase, I think we will have to be cautious and make assessment of how things are and how things are likely to be in a prudent way. So for our investment and trading purposes, we will have to factor in all these developments while making the case for a newer position. Let me open the chart for the JP Morgan Chase to see where it stands, where it is right now. Alright, here it comes, JPM. And after the release of its earnings report, there was this jump, this spike to 176.28, but it wasn't really sustained, and we have seen that it gave up all of its gains in no time. The session started with a bang, but it ended on a whimper. And I think in near term we will have to be cautious here. There is case to be made that after these stellar runs, some profit booking can't really be ruled out, and all these good things have already been factored in, and a lot of bad things are out there, which are yet to be factored in this euphoria in this bull run. So if we have to trade and invest in the stock, I think the opportunities are likely to keep coming. But instead of going for blindly buying the stock at these elevated levels, we will have to see for what it is that the best things, the good things have already been factored in, but a lot of challenges still remain, and that calls for caution. In the short term, as it has seen steep decline from the intraday high reached in the first hour of the trading session, I think we will have to see if it dips further below the immediate swing low, which is there around 168, and if it does that and declines towards 165 or thereabout, then that will signal the change of course for the short term, and in that case we will have to sit on the sidelines rather than go for a buy trade, and as and when if it continues to consolidate with bearish bias, we might even come across the opportunity to short sell it, but right now it is not really advisable to buy it at these levels, and maybe by the time we come back for trading on Monday we will have a better view of what is likely to come in coming sessions. So the key level to watch out for from the immediate perspective is 168 at first, because it is the immediate swing low, and afterwards the lower level of 165 also need to be kept in mind. If there is further decline below that, then I think the near term outlook is going to turn from bullish to bearish, and we will do it to start searching for the opportunities to go for a short sale trade in the short run. From the medium term, we will have to look at the day time frame picture, and in it you can see that for last 2 months the stock has rallied quite high from 135 to 175 in no time, in just 2 months, and in the same time period the Dow Jones Industrial Average and other two equity indices, the major equity indices of Nasdaq and S&P 500, have also seen strong rallies. So the JPM also rided that wave, and it is on these higher levels. But as the things are turning out, I think the near term peak has been reached, and unless something big happens, I am expecting the JPM to keep consolidating rather than continue to trade higher and higher. So if you are looking for newer opportunity, allow it to consolidate first. Maybe the price range of 155 160 is going to be quite a good opportunity if there is extended consolidation for at least couple of weeks around those price levels, and if we don't really see the JPM descending much below 150 mark, in that scenario we can indeed go for the new investment in the JPM stock. But right now we will have to wait at least for a couple of hours till the clarity emerges from the medium term perspective. On the larger time frame, the new high has been achieved after this continuous run on the higher side. So in the next couple of months we are likely to see the continuation of these bullish bias in the JPM stock. The larger time frame picture is bullish. All we need is the newer opportunity to arise for the investment. If you have missed out on investing in the last quarter, then given the time frame and given the bullish nature of its trajectory, I think we can go for the new trade if it consolidates for a couple of months here, maybe this quarter, if it spends in the ballpark of 150 or thereabout, we can indeed go for the new trade after the consolidation. But as it had made its peak only recently, and at the current levels, the risk is going to be a lot more. So because of that, I feel we will have to wait it out and allow the consolidation to unfold first, and as and when the things are providing us more and favorable risk reward ratio, we can indeed go for newer investment opportunities on the long side in the stock. So that's my assessment looking at the current trajectory of the JP Morgan and Chase share price and its financial earnings. The report, the financial report, is pointing to the strong balance sheet and the income statement. There is not much of an there is not much which is wrong on that count, and so is the case with the technical charting of its stock. All things are pointing northward, but only thing is that we will have to wait for better risk reward ratio and go for the trade when there is lower risk and possibility of higher revenues, higher profit for us in the stock. So that's my assessment looking at this trajectory of the stock, and I hope you have found the session helpful and useful for your investment decision. Now it's time for me to sign off. If you have any query or any idea to share, do write to me in the feedback, and I would be more than happy to take the discussion forward. Thank you all for joining in.